If you want to stop blowing your accounts as a trader, you need to focus on only trading setups that look exactly like this. In this video, I'm going to share the 4 reasons why this was an A+ setup and why you should be taking trades that look like this 10 out of 10 times. Several members of my free Discord server linked in bio were also able to catch this move today. So let's go into the 4 steps as to why this was a perfect setup. The first thing we're going to talk about is how we tapped into a higher time frame fair value gap. Now, in every trade you take, you want price to be delivering off a higher time frame fair value gap if you're entering on a lower time frame, like the 1, 2, 3, or 5 minute chart. And in this case, we had a bullish 15-minute fair value gap right here, and we did trade down into it on our entry time frame, which was the 1-minute chart. So as you can see, we dipped into this fair value gap that was holding up on the 15-minute chart. And another important thing about this fair value gap is that we actually had a significant low inside of it. So right here, we have this low that's inside of this bullish fair value gap. And these are amazing levels of liquidity. And if you sweep them and you're also then delivering off the fair value gap, you can expect a great reaction in price. And this works if you're moving up and you sweep a high inside of a bearish gap and then start moving down. It's just an extra bit of confluence. We always look for liquidity sweeps in my setups. That's the second part of the model. You want the fair value gap on a higher time frame, which is the 15-minute chart at this point because we're using the 1 minute to enter. And then you're also looking for a liquidity sweep of some sort. And if that level of liquidity is a high or low inside of that same fair value gap that you're looking at, that's a very good sign. That's amazing confluence. So right here we had it. Very quickly, I'll say that I use the 15-minute and above for bias. That means looking for the higher time frame fair value gaps and levels of important liquidity and swing highs like this. And then I use the 5-minute and below for my entries because that's just what works best for me as a day trader. So we go back to the 1-minute chart, which is my favorite chart to base my entries off of. And we have this bearish fair value gap that we left on the way down. Now keep in mind, we left this on the way down to sweeping liquidity and delivering off of this higher time frame bullish fair value gap. So when we start to reverse, we get this V-shaped recovery. And I always talk about the importance of a V-shaped recovery. If you're trying to trade an IFVG, you absolutely need to see something like this. You need to have it inverted very quickly because this is when you're going to get the best reactions. You're going to move right up to your targets. Think about it. You're sweeping liquidity, taking out a ton of stops, but then you're also delivering off this higher time frame fair value gap. That's all very bullish. So you should expect to see a V-shape right through, right? The time when you don't take these inversions is if you get something like this, right? Where you move down, then you chop around for an hour, and then you finally invert it like an hour later. That's not a good setup anymore. You want to trade momentum. Momentum is the most important part of an inversion. So right here, you can see we had very strong momentum. Yeah, we had a few upper wicks and stuff, but we end up moving through and it creates a V shape, and that's what you want to see. So you enter long right here. Now, what are your targets? I've cleared the chart off so you guys can follow along with this next section more easily, but the first order of business is finding out a logical stop loss. Now, on these inversion setups, right, because we close above this bearish fair value gap right here, so that's officially an inversion on the 1 minute, that's our entry. Now, your stop loss, what is it going to be? Well, for these inversions, you only stop out when you get a close below the original inversion level if you're long, or a close above it if you're short. So we can wick down here, right, and that shouldn't stop you out. But if you see a candle close back below this inversion level right here, you have to stop out. That's the logical stop loss. So then the first target would be these swing highs from the early morning. That was pre-market. And let's just see what happens when we target that. And then we'll also target these swing highs up here. This was the second significant swing high. Let's see how price reacts and how fast we hit the targets. So as you can see, within about 10 minutes, we've hit our first target very easily. And within about 25, we've hit our second. We had a little pullback, but never get stopped out, notice, because we're not even going break even at this point. We're entering here. We never even hit break even, and we zoom straight up to the second target. So why was this a good setup? I will reiterate it. First of all, you have a V-shaped IFVG where you have momentum. Right when you get this close above this fair value gap that was bearish, you should automatically be saying, all right, we have momentum. This is a V-shape. We're probably going to rip up to these swing highs. Let me get in. The next 2 reasons why it was such a good and obvious trade are because we had a 15-minute bullish fair value gap that was holding us up, and we had a strong wick reaction off of it, which means we were very bullish. And then we also had swept a significant swing low inside of that fair value gap. So there's 4 reasons right there. We had a higher time frame PD array that we were delivering off of. we had swept liquidity, we had a inversion fair value gap on the 1 minute chart, as we can see right here, and we had V-shaped momentum through it. Those four confluences together are going to give you an extremely high win rate. For me, I've been able to win about 80% of my trades using this combo. Now, the biggest thing is you have to be disciplined enough to wait for this type of setup. And like I said, you also cannot force this. If you see this fair value gap right here, but price only kind of does this and kind of makes its way through slowly and then goes up and inverts it an hour later, you cannot take that. You need the momentum for these trades. If you have the momentum, you're going to skyrocket right to your targets, and it's going to be the easiest trade of your life. So if you guys are still watching, you're probably serious about trading. If that's the case, make sure to like and subscribe, and definitely check out my free Discord linked in the bio. And I hope you guys enjoyed the video and got some value out of it. Like I said, keep tuning in. I'm going to provide a ton more content every day, every week. I'm getting new stuff up for you guys to help you all become better traders. Peace.